This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hi everyone, I know we're all hurting right now. Crypto has taken a beating, and Goldman Sachs says flatlining is the best case for stock-heavy portfolios. Flatlining? Zero returns? Sheesh. In situations like these, we can take a cue from the world's best investors, because a groundbreaking Ernst & Young study last year revealed that 8 in 10 ultra-high net worth individuals invest in alternatives. However, Bank of America's CIO recommends investing in one specific high-performing alternative to rescue your cash. He's talking about fine art. 2/3 of millionaires already hedge against inflation with art, according to UBS, because the last time inflation was this high, art appreciated by an unprecedented 33.2% annually. Now, obviously, most folks don't exactly have tens of millions lying around to start buying Banksys and Basquiats, but that's where Masterworks comes in. They're helping people keep their cash intact by offering fractional investments in the top 1% of the art world. And with a recession on the horizon, they've seen sign-ups increase by 320%. That, combined with the fact that they speak to every investor to make sure art is right for them. That means there's a wait list, but I'm hooking you guys up with priority access to skip the line, and it's as easy as going to masterworks.com and using promo code CryptoConversation. That's masterworks.com, promo code CryptoConversation. And you can see important Regulation A disclosures at masterworks.com/CD. Again, that's masterworks.com and use the promo code CryptoConversation to skip the line. And now, folks, it is on with the show. My guest today is Joshua Scigala. Joshua is the founder of the Standard, a decentralized stablecoin protocol that helps you lock up crypto and or physical gold to generate multiple fiat-pegged stablecoins. Very interesting. Joshua is also the co-founder of Voltaro, which is one of the OG Bitcoin exchanges way back in the day. Welcome to the show, Joshua.
Hey, thanks a lot, Andy. Yeah.
So, look, you and I were just talking as we started to get to know each other before we started recording, and you know, it's always good when, obviously I'm a Kiwi. It's always good to talk to an Aussie, but of course you're not actually based in Australia. Let's start with a bit of an introduction, Joshua. Tell us a little bit about your story and your background.
Yeah, sure thing. Basically, I found Bitcoin in 2010 because I was looking for a digital currency before then. I ran the world's first swap site where people could swap clothes instead of buying and selling. And that was basically sort of a thing after 9/11 happened. I was like, you know, I dove down the rabbit holes to figure out more details of what happened in that. And you end up with central banking and money and gold and all sorts of weird paths, right? And so I got really fascinated in alternative economies, and so that's why I built the original swap site where people could swap clothes. But then I soon realized that swapping was just a crap way of trading, really, because you have a whole marketplace, and if you have a great shirt and I don't, then if I love your shirt and you don't like anything I have, then the deal falls through, when I could just give you some sort of token and you could spend that in the rest of the marketplace for something that you do like. And so I started looking in like 2005, 2004 already for something like that, because I didn't want to create a central bank sort of, I didn't want to like issue tokens and then be just another central bank, because the whole point was to try and sort of, disrupt that system. But and then I found what the cypherpunks were doing and what some people in Amsterdam were doing with e-gold and e-cash sort of things. And yeah, the double spend problem was just an unsolvable problem. So I I dropped the idea of having some sort of token within within SwapStyle, and I just kept on going. But I did keep on sort of watching the space, and yeah, sure enough, in late 2010, the paper came across my table, and I nearly fell off my chair because I really didn't think that the double spend problem was solvable, and Satoshi had managed to do it. So then I just fell down the rabbit hole, and I quickly implemented Bitcoin QT, which it was called back then, into SwapStyle before it was named Core, and because it was mainly a women's focused site, because clothes mainly attracted women. It no one really knew what it was, and everyone just thought, what's this strange Bitcoin address thing I need to put in? And yeah, anyway, so yeah, that's sort of where I came from, and then
that's fascinating though, Joshua, and that's quite a. I mean, you're laughing about it now, and look, because that's hilarious. That's quite an odd juxtaposition, sort of, essentially you're talking about woman bartering vintage fashion, and then with the juxtaposition of that with a new form of decentralized money that no one would really have understood, especially in those early days.
No one. You could basically do a couple of things. You could buy alpaca socks from someone, and you could put your address onto SwapStyle. That was kind of the two things that you could do with Bitcoin. But it was just these sort of use cases. And back then, any use case for this thing was awesome. And the whole like the small forum that was the Bitcoin, everything, and it's changed so much over the years, where people they don't celebrate the small things anymore. The mom and pop stores, when they accepted Bitcoin, it was like, yeah. And Roger Ver back then, he was on Team BTC, and he would go around to different service stations and stuff, trying to get Bitcoin implemented. But back then it was really kind of like when the internet first started. It was all sort of, what, you've got the internet, are you a pornographer, or what are you, like, you're a weirdo, because, and you're like, no, the internet's way more than just that, I promise. But basically back then, the search engines, the porn industry had basically just taken over the search engine, because everything was you just spammed the tops of the website with keywords. So whatever you searched for, you found porn, and Google was the thing that really solved that problem. But before that, it was pretty sort of weird to be on the internet. Yeah. So, and it was the same for Bitcoin. If you're into Bitcoin, you're obviously a drug dealer or a drug taker or something.
Well, it's the other thing that's fascinating about this from your perspective, Joshua, is because famously when Satoshi published the white paper on the Bitcoin Talk forums, or the cryptographer mailing list that you're talking about, even the people on that list were people such as yourself, who had this kind of long-standing interest in alternative digital currencies, and a bit of a libertarian bent understanding of Austrian economics, all that kind of stuff. But even then, famously, most people were quite dismissive of the promise and potential of Bitcoin just based on that white paper. But you could see it immediately, you're saying, because you were aware of the double spend problem, and you'd been looking for a digital currency to solve a specific problem, which is, of course, what Bitcoin was designed to do.
Yeah, and really, like, Satoshi choosing the name Bitcoin really helped that, because it's sort of from Napster to BitTorrent. That was like a quick sort of, I get it, moment, because it was like money to Bitcoin, coin to Bitcoin, so it kind of stemmed, but also because the white paper started off with peer-to-peer in the title. And so, yeah, I quickly understood that there is a possibility of creating rare numbers. And so but the main aha moment when reading that paper was, they've created digital scarcity now. this is the first time we have digital scarcity. This is unheard of. We didn't have this before, and that was really the big aha moment at that time. And then the second biggest aha moment was I'm not sure how long, maybe 6 or 7 months after that. There was some young guy, some kid making music in his mum's basement in Iran, and I'm not sure if I should say this online with all these sanctions and stuff, but what happened was I thought, man, I really want to buy this album of yours. This is super cool music. I just loved it, and I wanted to support him and for making this, just buying the album. And I went to go to PayPal and I couldn't pay him, and I went to there was just no way to pay the guy. And then I said to him, hey, do you want to accept this thing called Bitcoin that I'm sort of playing around with? And yeah, he said yeah. And when I sent it to him, I can't remember how much it was. It was an absolute fortune at this stage, but but it it was a real huge mammoth aha moment where we just said we don't need a state apparatus or a global financial infrastructure censorship system to be able to transact peacefully. And it was just amazing, that moment that when he got those funds.
Well, fascinating stories, Joshua. And look, we could probably do a podcast or several indeed, just talking about the early days of Bitcoin. I'd love to hear those stories, but we should also talk about what you're doing now, which is the Standard, and looks quite interesting. And I suppose there's kind of a nice background which ties into what you were talking before. Like, you talk about this idea, it's on your website, trillions of US dollars worth of assets such as gold and different cryptocurrencies essentially locked away in vaults or digital wallets, and not doing too much. People are just holding it. So from what I can see, the headline, if you like, is the Standard is a next generation monetary system, and you're trying to unlock this stored value. So take it away. Tell us what the Standard is.
Yeah, I mean, the Standard really, we ran Vaultoro, which was the world's first Bitcoin physical gold exchange, where you could, it was an order book exchange. And that was after I lost a lot of money in the Mt. Gox collapse, which was the first Bitcoin exchange in the industry. And really at that stage, we just had no transparency in Bitcoin exchanges, but also we were dealing in fiat. And so we all got into Bitcoin back then to get away from fiat, yet we were pricing everything in USD, and we were dealing in fiat, and Mt. Gox took everyone's funds and basically died, and everyone holding fiat on that, the bank basically ran with that, or if the bank went broke, they would also run with those funds. And so it was, Vaultoro at the time was about saying, hey, we can trade rare numbers with rare metals. And rare metals, when you hold gold in a high security vaulting facility, you can hold it as allocated assets. And if they're allocated assets, it means they're fully insured and fully audited. And no one can, and if the exchange went broke, it doesn't matter, because it's not on the exchange's books. It's not their property. And that's very different to a bank. And anyway, so we've been running that since 2015, that exchange, and it's still going now. But one of the big things that we saw was in 2020, obviously we were a Bitcoin only business for a very long time. And we noticed this great big shift between freelancers and people working for us, invoicing us in Bitcoin and later Ethereum, to then starting to invoice in these stablecoins. And I was like, why do you want this stuff? Like, why would you want this? And really a resounding answer that always came back was, look, my accountant's going to kill me if I give them another invoice in Bitcoin that's shifted in price so much, and they have to calculate what it's worth now and then, and research the laws and all the rest of it. So they just invoice in a stable coin and then be able to get the value and then buy the speculative asset with those afterwards. And so that made a lot of sense. So that's where we saw the huge shift. And then I started more and more looking at some of the awful stable coins that were happening. And, Terra Luna was the latest, but I was invited to talk at La BitConf, which is the largest Latin American Bitcoin conference. And it's a wonderful conference, by the way, guys, if you ever get your chance to be over there. Anyway, in 2019, and I was on stage with Neville from Reserve, and we were discussing these algorithmic stablecoins, and Terra Luna's just released its white paper, and I read it on the way over there on the plane, and I just really thought, this is just a joke. Like, this is going to fail. You can't back a currency with a governance token that you can print to infinite amounts. It just smells really bad. And so we gave a talk about that on stage, that one of these is going to get really, really big, and then it's going to fail, and then governments are going to step in and regulate the space like crazy. So let's not let that happen. And so about 6 months after that talk, I started thinking about another type of stablecoin and really taking Maker, the Maker protocol, Maker DAI, and trying to think of a next generation version of that. And that's really what the Standard came from. And obviously the Standard comes from the name, the gold standard, right? And and so what is the gold standard? The gold standard was the ability of the state to hold a bunch of gold and then use that as the backing for a bunch of paper flying around. And so being able to allow people anywhere to send Bitcoin or wrapped Bitcoin or Ethereum into a smart contract, lock that up, and so they still have the private keys. They're still the ones holding the keys. No one can speculate with those funds, but lock them up into a smart contract, and then issue at least 80% of that value as a stable cryptocurrency, is so wonderful that it's mind blowing. And there was major things that we wanted to fix with that. Compared to Maker, and our unique selling points really were that I didn't want that interest rates were used as the base layer of money of this new monetary system that we're calling the Standard. And so we tried to figure out a better way to peg the stable coins than using an interest rate. And we also wanted to have better ways of stopping liquidations, but we can go into that later. But yeah, effectively, people are backing the cryptocurrency, but always provably having more value in the smart contracts than there are stable coins floating around.
Yeah, right. And interesting when you're talking about Luna and yeah, what happened there. And I suppose, yeah, I mean, they really did do what seems like an unfeasible amount of damage to the space by effectively letting this experimental algorithmic stablecoin out into the wild and in quite an irresponsible fashion, certainly in hindsight, right?
Absolutely. I mean, when they were offering a continuous 20%, there's nothing wrong with certain projects offering 20% APY if you can know, okay, how is that happening and how long can they keep that up? Because they can't keep it up forever unless there's a legitimate market force behind where there's earning fees to actually make that, because otherwise it is a type of Ponzi scheme, except it's even more hardcore than a Ponzi scheme because they can just print that 20% out of nowhere and give it to you. At least with a Ponzi scheme, they had to work to get new people in. With Terra Luna, they didn't even need to do that. So it's really about, one good thing, I try to look at the positives always, is that as these sorts of events happen, a lot of people, a lot of people get hurt from it, which isn't good. but at the same time, it's the mass educational moment where people go, oh, okay, well, next time that's not going to happen. And I feel that the world has been so protected from risk by governments. You're not allowed to invest in anything unless you've got $1 million of liquidity just lying around. And that's not locked up in a house. That's like, so you're becoming an accredited investor. But you're allowed to go to the poker machines or to the dogs or to the horses, but you can't actually invest in projects. And so this obsession with de-risking has allowed people to become so stupid that they fall for things like some random tweet saying, I'm going to send you back double if you send me, one, and this sort of stuff. And it's unbelievable to me that people fall for that. But as time goes by, people learn, oh, okay, that's what a scam looks like. All right.
Yeah. That's exactly right. And so tell us about it's called the Standard Euro Minting event. And there's a countdown on the website, 38 days away, Joshua.
Yeah, I mean, we've been working on it for a year, and it's getting close. As this bear market's happened, we've sort of just been like, let's not launch it yet. Let's just keep building, and head down and build. And we've been very good. Like the bear markets are good for one thing. They allow good projects to bubble up to the top and a lot of the crap to fall away to the wayside. And we've been always very conservative with our way of hedging the early money that we've raised and stuff like that. So we've managed to do quite well during this bear market. But really, what the IBCO is, what the initial bonding curve offering is, what we're calling it, is a way to create a massive pool of liquidity, and while rewarding people that come in early for building that. And the reason why we're building that is it's really the other way to go, rather than us charging interest, rather than the protocol charging interest to stabilize the currency. So what I mean by that is that MakerDAI, how it works for the listeners that don't know, is that DAI is effectively tethered or pegged to the US dollar. And if DAI drops below $1, because DAI is borrowed, people borrow DAI from themselves. They lock up funds and they borrow DAI, just like with the standard. And if DAI drops below $1, what happens is the protocol lifts interest rates. And so people go, ooh, that's a bit expensive now. I borrowed this money and now the interest rates are like 6%. Okay, I'm gonna go to the secondary markets and buy back DAI and pay off my loan. And that buyback pressure, obviously more buying pressure, as more demand lifts the price, right? So you get the DAI moving back up closer to a 1-to-1 peg. And it's the other way around as well. If you go above $1, then they'll lower interest rates, and people will borrow more and drop it onto the markets, and that will, too much supply drops the price. So this mechanism is very, very simple, but also very, very similar to the central banking system. The central banks try to equalize shocks to the market by lifting and lowering interest rates. It's the single lever that they have. And to me, I just didn't want to go that route. So we, our engineers and myself and a couple of other really clever people stood around and well, we sat. Let's face it, we sat. And we planned out a whole bunch of different mechanisms that we could use. And really what it came down to is what allows what is a stablecoin? Well, a stablecoin, if it's pegged to the euro, the base level thing is, can I get €1 worth of tokenized gold or Ethereum or Bitcoin for this token? And that's all it is. So what we wanted to do then is say, okay, let's build an initial pool, a pool called a stability pool, where there's enough liquidity that will always buy back at 1. I mean, we're going to probably spread it between like 100 basis points from 1, so or 200 basis points, so 99 cents to 101, let's say. But the basis is that there's this huge pool, and so if anyone ever wants to swap it for €1 worth of like USDT or €1 worth of Ethereum, then they would just send it to that pool and that pool would send it out. And so how we're collecting that pool initially is to say, hey, for partaking early, we're going to give you a discount on the euro. So you would send in, let's say, $85 worth or euros worth of Ethereum, and you would get back 100 S euro. So in that instant, you've made like a 15% gain. Although what your listeners probably realize is, hey, in that moment, it's not worth €1 yet because I've just sold it for 85 cents, right? So, but the hope is obviously the more, not the hope, the way the smart contract's programmed is that the more volume that comes into this contract, the less that discount becomes until it reaches a one-to-one peg. And so that's the initial way we lift that. And then there's the second stage to that, to say, okay, we've now got this S euro. People have got this S euro. What can they do with it? And so we developed a mechanism where they can basically put that with some. So let's say they've now got 100 S euro. They can take 100 S euro and 100 USDT and put that into a liquidity pool and swap it for a bond. And it's just a yield farming opportunity. So they can turn that 100 then into 120 by locking it up for like 7 days, a week, 3 months, I think, a month, 3 months, 6 months, something like that. You have to check on the site, but basically, it's these mechanisms, and we're already talking to a whole bunch of different projects to accept S euro and stuff. And S euro is only the first stablecoin. This was the other thing that we really wanted to disrupt, was why is everything pegged to USD? We have the Indian rupee, we have Turkish lira, all inflating like crazy, and people are wanting to trade in their local currency. They want a stablecoin in their local currency. So S euro is our first one, but the fact of the matter is, you really want a global mechanism where people can lock up assets, and that's why we call it the private gold standard. Because after the IBCO, people will be able to set up these private vaults where they send Bitcoin into a private smart vault and issue themselves S euro from there. So the initial bonding curve is that, and then private vaults will come directly after that.
And so if people are listening, Joshua, and they're thinking, all right, sounds good, I'd like to participate, and I said, so this is the first one, the standard euro that you're talking about, first stablecoin. I said it was the countdown says 38 days as we record. By the time I publish this, which is probably, let's say, I reckon it'll be about a week away. So it's you probably got 30 days left by the time people are listening to this. So if that is the context, and what should people do if they are intrigued and want to know more and participate, where should they go?
Yeah, I mean, they should definitely jump onto the website and then follow the links to the Discord and to the Telegram, because we're still a very young project. We've sort of coming out of the woodworks now. We've got really some of the best people in the industry. We have Hartesh Sawhney as the smart contract auditing firm behind Zocure. He pretty much invented smart contract auditing when Ethereum first launched, and we have some great talent on the team, and you can go into the Discord and you can chat with us. We're now spreading out to more of a DAO as well, which is also really fascinating, man. Like being able to see, for me, seeing Bitcoin was a massive aha moment way back then. But seeing how DAOs are now starting to explode is another massive step forward in libertarian or anarchic philosophy, where we can say, well, anybody can join a project and own part of that project and be private about it, but then partake with it and help it grow and help steer it. And I just think that's just so wonderful. It's such a breath of fresh air and such a disruption that hasn't really been realized yet to its fullest potential. But yeah, you can definitely go there to our Discord and to our Telegram and chat and just hang out. But also start to learn about what we're doing. One of the cool things is that, in what was it, 2013 or something, I had to put a deposit down for an apartment, and I had to sell, I don't know what it was, like 40 Bitcoin or something like that back then. And I was like, man, this is just a deposit for a rental. And if I had something like the Standard, I could have just locked those funds up and borrowed that from myself as S euro and at 0% interest.
Yeah.
And then also the inflation is slowly paying off my debt, because the inflation actually makes my debt worth less over time. And by the way, you don't get hit with capital gains tax either, because you're not selling your Bitcoin. It's not a taxable event. You're borrowing money, and you have to pay that back. So it's really such a wonderful all round protocol, and I think there's so much more to learn about it than we get to cover here. But I think it's going to actually be the standard for the internet of stablecoins, and I do think at the end of the day, when IBCOs get released, these are the government issued stablecoins. I don't think they're going to let centralized stablecoins like USDC live. They're going to monopolize that side. So it'll basically be decentralized stablecoins like the Standard or Maker and CBDCs. And CBDCs are starting to look more and more really, really crazy, terrible. Like some of the experiments I'm seeing.
Yeah.
Oh, absolutely. It's like crazy dystopian. I'm seeing some of the experiments coming out where they're saying, oh, okay, well, we can put a countdown on your money. So if you don't spend it within 6 months, then it loses any value that it had. It expires. Or another one that I saw recently was in China that they're trying out was like, if there's a lockdown, now that's a thing. If there's a lockdown, we can say, oh, you're not allowed to spend this in the other province. We geofence your money. So these sorts of things are just absolutely crazy, scary for freedom of the individual, of the normal person. And so I think projects like ours, it's really, really important that people start to embrace and support projects that are trying to develop solid decentralized infrastructure, and support us in ways not just financially, obviously, also morally and just helping out. If you're good at graphics, come and help the DAO. If you're good at writing, come and help the DAO. It's really a cool thing to do.
Well, and listeners, if just the website, which of course will be in the show notes, but it is simply the Standard.io. As we finish off this part of the podcast, Joshua, just before we go to the break, there's one other thing that stood out for me on your website. I used to be a bit of a Buckminster Fuller nerd back in the day, and I used to have a document on my computer just filled with Buckminster Fuller writings, quotes, nice. Images, and with the classic one, it's probably one of his best known quotes, which you've used on the website. So I'll ask you to give the context as to what you mean. But the quote, of course, is, "You never change things by fighting the existing reality. To change something, you need to build a new model that makes the existing model obsolete." And I think we know, but why has that resonated with you? Why does that resonate, Joshua?
It resonates because we had, all these people around the world sort of hopelessly demonstrating the 99% sort of, Occupy Wall Street movements and all these things where everyone's battling, stop, and begging the state for a gold. Oh, give me a gold, like all the gold bugs, give me a gold standard and all this sort of stuff. And why it resonates is because, like, we don't need to beg anybody for this sort of a change, for any change, you build something better. You build something better, and you start using it, and you get people to use it, and you leave the old behind, and just leave it as obsolete, and play into that obsolescence rather than fighting it as some big Goliath. You just make Goliath obsolete.
Exactly right. Exactly right. Wonderfully said, Joshua. Let's go to a very quick break, and then we'll come back. We'll have some fun. We'll run you through the very famous Crypto Conversation Hot Take Round.
Let's do it.
Here's what's being said about Masterworks.
My name is Jacob N. I'm from Long Island, and I've invested over $73,000 with Masterworks. My portfolio performance just wasn't cutting it. I researched all these alternative investments, like crypto and NFTs, but they didn't make sense to me. Then I read about Masterworks in Forbes, and I signed up right away. And now you can too. Thanks, Masterworks.
Get VIP access at masterworks.io and use promo code JACOB. See important disclosures at masterworks.io/DC.
All right, we are back, and I'm with Joshua Scigala. He is the founder of The Standard. As we've heard, fascinating concept, a decentralized stablecoin protocol aiming to set the standard for the next wave or a new breed of backed stablecoins, essentially. Joshua, I like to finish each podcast with a very quick round of rapid-fire crypto conversation hot takes. Are you up for it?
I'm ready. I've got my flak jacket on.
Excellent. Just going to run some questions at you, Joshua. No right or wrong way to do this. Let's see what you've got to say. Question 1 is, where would you say you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I would say I'm a competition maximalist. You know, this was the whole thing of Satoshi. It was like, hey, if you screw with that one, there's an exit door here. And, you know, I love Bitcoin. Bitcoin's the best in my eyes for what it's done. I'm absolutely behind it. But really, there's, you know, at the end of the day, it's all technology, and we should keep an open mind.
Yep. All right, very sensible. What would you say, Joshua, is your firmest conviction crypto opinion?
Firmest conviction is if it's too good to be true, it probably is. Keep an open mind. The state needs less power, and that's
Yeah. Very nice. Hey, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. And look, Joshua, as someone who's essentially seen the entire life cycle to date of Bitcoin's existence from publication of white paper to where we are today, 12, 13, 14 years later, whatever it is. If you think about all that's happened in that time, cast your mind forward another 10 years. If we're thinking about Bitcoin, what does it look like in 10 years' time?
Well, as AI starts to really take a mature step forward, which it has, if anyone's kept up with GPT-3 and some of the stuff coming out of OpenAI in terms of image generation, text-to-image stuff, you'll see that captures and stuff, these things that protect bots from your service, from your web service, are basically null and void. And so in the future, I see a future where bots will be 99.99999% of the internet, all talking to each other and trying to sell each other things. And so the only way to sort of allow people some space is to make it a payment in Satoshis or some sort of crypto micro payment, like nano payments to drop a message. And the thing is, with that, then the bots will have to then become part of the economy to even spam anything. So they'll start offering their services for currency and running their own businesses and becoming truly part of the internet infrastructure. But yeah, in the future, you won't know who's a human or not in a very close future. I mean, right now you can't even tell anymore, really.
Yeah, fascinating. Well, the flip side of that, of course, is a quote by William Gibson, Joshua, who famously said that the future is already here, it's just not evenly distributed, right? So if that's the case, can you think of an example of the future being here right now, but most people aren't aware of it?
Oh, absolutely. I mean, AI, like the fact that most people don't realize what's actually at our doorstep right now in terms of the ability of AI. It used to be every year where a large model would come along and you'd be like, wow, that's a huge step forward in AI. And then it was every 6 months, another like 2, and then 4 months. Now it's every week, every day. There's like countless new upgrades in AI models. Like it's becoming insane. And so, when people really just play with something like Midjourney, do yourselves a favor, just download Discord and go to Midjourney and get an account, and you'll see what it does, and you'll start to just have moments where you're lying in bed and thinking, what is humanity going to do for work? I don't mean to laugh, because it is a very serious question.
Well, and funnily enough, I mean, it brings us to the next question, which is just as serious. And it's, I usually say it's time to zoom out, time to get weird just for a second, but I know you're comfortable getting weird, Joshua, but what do you see as the long-term future for the human race? Do you see dystopia or utopia?
I mean, I'm a big believer in yin-yang. I think there's always going to be both sides of the equation, but we need to, as humanity, I'm hoping that every child that's born can be cherished with peaceful parenting and brought up with peaceful parenting, so that we can have a generation that doesn't just bow down to authority, actually thinks critically, is not a hardcore narcissist, and can bring the world a bit more forward into a sort of post-enlightened anarchic state where we really cherish the non-aggression principle, and stuff like that. But I really hope for a positive, naturally, but I do see that we need to look after the next generation.
Of course. And that brings us nicely, really, to the final question, Joshua, which is, what is your favorite science fiction book, film, or TV show? I've always really loved Snow Crash. I think it was it was just one of those sort of books that I read when I was young, and it never really left me. But anything from William Gibson, as God, there's so much. But I would have to say, anything from William. Neuromancer.
Yeah. Neuromancer. I mean, it's weird. Neuromancer is it's quite a hard read. But it's funny when you read it now, it's very interesting. And on the other side, I think 1984 was so important as well, for understanding what's sort of happening now, and some of the warning signs of what to look out for, especially with sort of the rise of socialist states gaining more and more power, to sort of realize the problems that can arise from the total embracement of that sort of absolute power structure, especially when it's very, very subtle in its heat, as they turn up the heat very slowly. You don't even know. You're just like, oh, that's very convenient. Oh, that's cool. Yeah, that's convenient. To be careful of convenience.
I always love the, 1984, George Orwell, fantastic book, did a lot to kind of predict this authoritarian dystopian future. But the flip side, what's his name? Huxley's Brave New World, published around the same time, again, predicts a future dystopia, but they're polar opposites. And yet, because Brave New World is all about essentially being amused to death, where everything is possible in society to the point that nothing really matters and no one knows what the truth is because everyone is just distracted by pleasure. And both those two different dystopias perfectly describe different parts of the world today, because half the world is, oppressed and observed and authoritarian. The other half of the world is just lost in social media and pornography, and it's quite interesting.
Yeah, absolutely. And now with sorry to harp on about AI, but really a lot of the images that are easy for anybody to manipulate now. I actually come from the special effects field. Back, I used to work for Channel 9 and Channel 7, and
right.
I even worked a little bit on The Matrix back then, the first one. But,
oh, interesting.
Back then you would spend days, if not weeks, on a scene to do something that you can really just knock out on your phone while you're taking a dump. It's insane.
Wow.
So
fascinating.
you don't know what you're looking at in the future. Nothing is absolutely. It used to be like you see something, a video, and you're like, oh wow, that person did that thing. Yeah. And in a year's time, you won't know. You'll just be like, well, I don't know, it could be fake.
Nothing is real. Everything is a bot. Don't trust anyone. What a world. Fascinating talking to you today, Joshua. I've very much enjoyed it. Thank you so much for coming on the show. Nothing else really to say except hand the metaphorical microphone back to your good self. Tell the people where they can find you on Twitter or wherever else you hang out, and again, where they should go to learn all about what you guys are doing at the Standard. Yeah,
I'm on Twitter. It's J Scigala, which is Scigala. That's J Scigala. And just go to thestandard.io and you can follow all the links there.
Fantastic. Thanks, Joshua. All the best, and bye for now.
Cheers.
All right, there you go. How good was that? That was Joshua from The Standard. Fascinating guy. Very much enjoyed talking with Joshua, especially at the end there. Yeah, I mean, it's just a funny thought, but yeah, we're not too far away from, we really are not too far away from a world where anything is possible, anything is believable, to a point where nothing is believable and everything online is a bot. That's kind of Twitter right now. Can Elon fix the bot problem? That's one of the narratives going forward as well. So yeah, interesting way to finish. Thanks for listening, team. Don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using. Give us a 5-star rating. Would appreciate it. Thanks, team. This was the Crypto Conversation for Brave a New Coin.